Welcome back to Smart Stock Sam, where we find the setups before they move, and this time, we called it. Last week, right here on this channel, we laid out the exact floor, the exact trigger, and the exact levels to watch on Bitmine Immersion Technologies, ticker BMNR. And what happened? The stock dipped to $18.65, 3 cents below our predicted floor of $18.68, and then buyers flooded in immediately. That is not luck. That is precision analysis, and today we are going all in on what happens next. After Friday's sell-off, the single biggest question on every trader's mind is whether BMNR is setting up for a powerful rebound or rolling over completely. We are going to answer that question today with cold, hard data. We will walk through the fundamentals, the institutional money moves, the technical setup, and the options market that is quietly screaming what is about to happen. By the end of this video, you will have a clear price target for next week and a game plan to go with it. So let's get into it. To understand why this opportunity is so unusual, we have to start with the 4 pillars holding this thesis together. First, the fundamentals, and they are staggering. Second, the institutional sentiment, which tells us exactly where the smart money is leaning. Third, the technical picture, which has been playing out like a script. And fourth, the final verdict. Let's go pillar by pillar, starting with the fundamentals. When you look at the price-to-book ratio comparison, one number jumps off the screen immediately. The industry average for crypto infrastructure peers sits at 14.17 times book value. BMNR? It is trading at 0.83 times. Think about what that means in plain English. You are buying a dollar's worth of assets for 83 cents. Could the market really be mispricing a company this badly? Is it even possible that an asset of this magnitude is sitting right in front of everyone and almost nobody is talking about it the right way? The answer is yes, and here is why. At the heart of this story is what we call the crown jewel. BMNR holds 4,422,659 Ethereum. That is 3.66% of the entire global circulating supply of Ethereum sitting on one company's balance sheet. We are talking about a treasury valued between $8.4 and $8.7 billion. In a world where Ethereum is rapidly becoming the settlement layer for global finance, BMNR has not just a seat at the table, they have built the table. And here is the part that should stop you in your tracks. At the current stock price, you are buying all of that multi-billion-dollar treasury at a discount. But what if I told you that is still only half the story? Because of that 0.83 price-to-book ratio, when you buy the stock today, you are not just buying the Ethereum, you are getting a fully operational crypto mining business effectively for free. You are getting 193 Bitcoin for free. And you are getting a $200 million stake in Beast Industries. Yes, the company tied to Mr. Beast, for free. The market is so focused on daily Ethereum price fluctuations that it is valuing all of these bonus assets at zero. When is the last time you were offered a $200 million side business at no charge? Now, holding assets is powerful, but how does this company actually generate cash flow? That is where the revenue picture gets interesting. Currently, 69% of that massive Ethereum treasury is staked, generating $171 million in annualized high-margin revenue. But look at what is coming in the first quarter of 2026. With the launch of their MAVAN platform, revenue is projected to surge to $249 million. They are building a compounding revenue engine that generates cash without liquidating a single coin. Could this platform launch be the catalyst that finally forces the market to reprice this stock? The numbers certainly suggest it could be. And unlike almost every other company operating at this scale, there is zero debt. Over $8.7 billion in assets, not a single dollar of debt, no high-interest loans, no equipment financing, no pressure to sell Ethereum to cover liabilities. That kind of balance sheet gives BMNR the staying power to outlast any market downturn and pounce when conditions turn bullish. It is an almost unfair competitive advantage. Which brings us to the second pillar, sentiment, and specifically where the institutional money is going. While retail investors were panic selling during last week's volatility, the biggest banks on Wall Street were quietly and aggressively buying. Morgan Stanley now holds over 12 million shares. Bank of America increased their position by an almost unbelievable 1,668%. JPMorgan just stepped in with a brand new $102.5 million position. And most telling of all, on February 27th, just days ago, Strategic Investment Solutions increased their holdings by 1,000%. These are not speculative traders chasing a meme. These are the most sophisticated capital allocators on the planet, and they are all pointing in the same direction. So what do the professional analysts think this stock is worth? The range is remarkable. B. Riley has a conservative target of $30. Cantor Fitzgerald sits at $39. And Guru Focus puts fair value at $57.75. The consensus average of $48.67 represents a potential 153% upside from current levels. Is it really possible that Wall Street's top analysts are all this far ahead of the market price? Apparently, yes. Now, the third pillar, the technical setup. And this is where it gets exciting. Our models predicted a floor at $18.68. And last week, the stock hit $18.65 before buyers stepped in with surgical precision. The chart is revealing exactly where major institutional limit orders are stacked, heavily concentrated between $19.50 and $20.10. But before we look ahead, we have to acknowledge the headwinds that have been holding this back. Last week, hot U.S. inflation data and a $9 billion crypto options expiry created sector-wide pressure. But arguably, the most important structural development is the lawsuit against Jane Street Group regarding alleged price manipulation algorithms. These so-called 10 a.m. dump algorithms have been creating artificial selling pressure on BMNR for months. If those are removed from the equation, is it even possible this stock remains at current levels? That seems very unlikely. And the options market is confirming the setup. For the March 6th expiration, there is a massive concentration of open interest at the $20 strike, acting like a magnet. But look at the $22 strike. Over 6,600 call contracts are sitting there. If the stock breaks $22, market makers are forced to buy shares to hedge their exposure, potentially triggering a gamma squeeze that could launch the price toward $25 and then $27 in rapid succession. This spring is coiled and waiting. Here is the game plan for next week. The ideal entry zone is between $18.80 and $19.50. As long as we hold above $18.68, the bullish thesis remains fully intact. Reclaiming $21.50, the 20-day moving average, will be the signal that the trend has officially reversed. Once that happens, the near-term target moves directly to the $25 to $30 range. However, a daily close below $18.68 invalidates this setup, and we could slide toward $15. That asymmetric risk-reward, combined with 6.05% of the float currently short, means a MAVAN launch catalyst could trigger a short squeeze of historic proportions. Before we wrap up, an important reminder like always. This video is purely for informational and entertainment purposes only. Nothing discussed here constitutes financial advice. All investments carry risk, and past performance does not guarantee future results. Always do your own research and consult a qualified financial advisor before making any investment decisions. The positions and price targets discussed represent analysis, not guarantees. Now for the final verdict on smart stock SAM. BMNR is a strong buy. A rare multi-billion-dollar valuation gap. The most aggressive institutional accumulation we have seen in this sector in years. A proven technical floor, and an options market primed for a volatility burst, all at the same time. The market is handing you a gift by mispricing these assets. The only question is whether you see the disconnect before the rest of the market catches up. Here is what I want to know from you. Drop it in the comments right now. Do you think the MAVAN platform launch will be the catalyst that finally closes this valuation gap? Or do you believe the macro headwinds will keep suppressing the price through March? I read every single comment, and your perspective genuinely shapes the content we cover next. If this breakdown gave you clarity and value, smash that like button. It takes 2 seconds and helps this channel reach more investors who need this analysis. And if you are not already subscribed to Smart Stock Sam, hit that subscribe button right now so you never miss a setup like this one. I will see you in the next one.